A and B are two partners sharing profits and losses in the ratio of 3:2. And following is the balance sheet as on 31st March 2010. Building 40,000, cash 15, profit and loss count 5,000, furniture 20,000, total 80,000. A's capital 30,000, B's capital 30,000, reserve fund 10,000, creditors 10,000, total 80,000. C comes as a new partner for 1/4 share and he brings proportionate capital and 5,000 as goodwill. Got confused? Don't worry, I'll explain you. And building was appreciated by 20%, furniture was depreciated by 10%. Now, you know the steps. In what order we take the steps? First of all, set the ratios for A, B, C. Old ratio 3:2, sacrificing ratio 3:2, new ratio 9:6:5. Now we'll start journal entries. First of all, distribute all the accumulated profits. Have a look at the liability side. Yes, there is reserve fund of rupees 10,000. So our journal entry will be reserve fund account debit 10,000 to A's capital to B's capital 6,000, 4,000. This reserve fund has been distributed in the old ratio of 3:2. Then distribute all the accumulated losses. Have a look at the asset side. Is there any accumulated loss? Yes. Profit and loss count 5,000. So the journal entry will be A's capital count debit, B's capital count debit to profit and loss count 3,000, 2,000, 5,000. This loss has been distributed in the old ratio between A and B in the ratio of 3:2. Now, write off goodwill account. If there is any goodwill account in the books, have a look at the asset side. Is there any goodwill? No. So no need to pass the journal entry. Now the journal entry is for revaluation. Building has been appreciated. So journal entry will be building account debit to revaluation account 8,000. Furniture has been depreciated by 10%. So revaluation account debit to furniture 2,000 rupees. Now leave the space for one journal entry because at this moment we don't know what's the exactly loss or profit on account of revaluation account. This loss or profit can be ascertained only when we prepare revaluation account. At this moment we are passing journal entries. So now the new partner is coming. Now it's a new thing for you. He brings proportionate capital. It's a new thing for you. I don't know how much money he will bring, but it may be 10,000, it may be 50,000, it may be 40,000. I will have to calculate separately. But you should pass the journal entry just now. Cash account debit to C's capital. Don't write down any amount because at this moment you don't know how much money will be brought by C as capital. And then the adjustment entry for goodwill. Because he has brought 5,000 as goodwill. So the adjustment entry for goodwill will be C's capital account debit to A's capital to B's capital 5,000, 3,000, 2,000. This 5,000 has been distributed in the sacrificing ratio of 3:2. You know it. When we pass the adjustment entry for goodwill, it is always passed in sacrificing ratio.